All right. Here in the trading room, it's Wednesday on the 2nd of October. We know we're on the heels when you come into today with the recession talk because of a weak manufacturing number, ISM. Here's the important part of being part of a good community. Number one, people are telling you things that matter, things that are important, not things that they read in a book that they didn't learn the right way. So when you're around the right people, you're apprised of what's important, not, well, there's something that really doesn't matter, but this guy let me know about it. No, when you're around the right people. So something real practical. One of the guys in the room, Peter, says, hey, this 845, usually not a big deal, but it's a manufacturing number, regional out of New York. Generally, it doesn't matter, but because it's a manufacturing number on the heels of yesterday's ISM weak manufacturing print, it could be. So it was. It danced lower right in here. If you're looking at, it was actually right here. They sold them off, all right? I'm going to tell you exactly how I struggled with this, though. I didn't get it up here near the top of this range. I got it near the middle of the range, which wasn't awful. But what was awful is how long this thing sat. Well, it was even longer than that. This is actually it right there. How long this thing sat back and forth at the lows on a busy first 15 minutes, right? Down 25 points, all this activity. We're still going down. We're down 50 handles on the session. And then finally, I'm short though, right in the middle. I puke it for a loss, but it would have been a real disaster. 3 more points as it walked up, okay? Puke it for a smaller loss. Not happy about it. Stuck in it too long. Emotional capital, everything else. But again, didn't hang on to it for all this heat. Got out because I seen selling come in and it couldn't go down. Too many people are short usually. So they get this pop and then this subsequent move lower. And able to put them back out, which means get short again for it to work and get some of the money back, because the middle of this box was important. And there's no coincidence. As soon as it got through the middle, they attacked these swing lows and they had a nice move lower. All right. When buying comes in and it can't go up, chances are we go down. When selling comes in and you can't go down, chances are look out above, at least momentarily. So if you take a footprint in our edge zones and you walk it back to 845 Central, you might see it come in. It might have came in and went away. But we go back to 845. That's what this chop looks like. These number bars, also called footprints. Stick it. You're in it. You're in it. You're in it. Come on, come on. You know it's going to go lower. Then you don't actually see it in here. But some selling came in, and we couldn't go down. And as soon as we got above that selling, it might have been in here, all this selling in here. But it flashed red. We couldn't go down. And so instead of holding on to it for another 2 points of heat, you're out. It's a loser, but you have the wherewithal to maybe get back in. To sell 7 halves, hold on to 10 half, and then say that was a great trade because you got out at 5. Too much heat on a day like today. You got in, took a loser, got back in, got it back, and maybe then some. Much better way to trade. So you're using the consolidation box and some flows that are coming in aggressively, selling the market, and can't get price to move lower. The win moment to get in, the win moment to get out, the wherewithal to put them back out and focus on what the hell you're doing. I will add in today's video that the price of poker goes up when we got bigger ranges and more volatility. Price of poker goes up. So cut your size because your risk is automatically going to go up. You have no control over that. Your reward should be up, but your risk going to be up. And I'd be able to get out of what you're used to getting out of, or stomach maybe if you keep full size on. If you only trade one E-mini, let's say in the ES, trades 5 or 6 micros. Do something to offset that risk and essentially cut your size synthetically if you're a one-lot mini trader. Because your risk is going to go up, and all it takes is one stupid trade to throw you off. This is opportunistic, but it's dangerous if you don't know what you're doing. And what happens on volatile days for guys who have bad habits, the market has less forgiveness, and these are the days that make you pay for adding to losers, for fighting the downside, for getting stuck in the hole. These are the days that blow up accounts because people were allowed to get rid of bad habits in a 10-point rotational day and just get their face rearranged because we're down 50 handles, 50 points, middle of the day.